Oh, hi there. I didn't see you come in. I'm just doing some research and trying to figure out which stocks I want to buy in October of 2017. Would you like me to share them with you? All right then. Let's make this another episode of Financial Success. All right, starting off the list is going to be a company that I'm sure all of you know of, and that is eBay. And that's right, don't reread the title. This is stock picks of 2017, not stock picks of October 2003. eBay is still relevant in today's marketplace. So if you go back to ebay.com, you'll see and do a search, you can still buy plenty of items. And I didn't know this. I guess people still shop there because I'm looking at a lot of the numbers and I'm seeing a lot of great things for this company. First of all, we all think to them in relation and compare them to Amazon. Now Amazon is trading at a 242.9 PE at the time of this video. eBay is trading at 5.75. In other words, it's 50 times more expensive to buy Amazon profits than to buy eBay profits, which is just crazy. I mean, I get it that Amazon is just this dominant beast that's taking things over, but for crying out loud, 50 times more expensive for a dollar of their money versus a dollar of eBay's profits. So let's take a look a little deeper. Here's how effective your investment is in eBay. Now the return on equity is 82.87 and the return on investment capital of 36.52 make this a very lucrative. They do a lot with the investment money that they have. Now the profitability, they have a gross profit margin of 76.92. It gives them an operating margin of 24.07 and a net profit margin of 81%. So this is actually a very healthy company, making quite a bit of money off of the small market, relatively small market cap in comparison to Amazon that they have. And they're very much in control of their expenses, and they have a lot of money to be reinvesting in the business. So at a PE of 5.75, it's definitely something. If this company can stay relevant, this is a bargain. You almost can't afford not to buy up the stock at this kind of price. Next on the list, Delta Airlines, ticker symbol DAL, with a PE of 9.56, which is lower than the industry average of 14.1. You're getting a great value for probably, arguably, one of the best, if not the best, airlines. Delta is always known for being kind of one of the more premier airlines. Their flights are more on time than any other of the major airlines. They have less likelihood of having your bag get lost and those types of things. Not to mention, you always get peanuts and a drink. So in today's day and age of cheap flying, they still have a little bit more class and a little bit more sophistication. So I know some people will always buy the cheapest flight, and they're competitive price-wise, but you also have to take into account a lot of people that travel for business. When I travel for work, I'm picking a flight not really so much based on the cost. You're picking something convenient. If you see a Delta flight there and you got Delta miles, you're probably going to go with that Delta flight because you just know that it's going to be on time and it's going to be more reliable. So that premium, I think it's a lot more value than a lot of people realize because of all of the business traffic that comes through Delta. Now, another reason why Delta is such a strong company is the balance sheet and how much improvement they've had to the balance sheet in the recent years. Going back to 2009, when they had $26 billion in debt, they've been steadily decreasing that now to where it's only $15 billion, $2.7 billion in cash and equivalents. Consistently, they've been raising their short-term investments. With cash and short-term investments, over $3,249 billion in current assets of $7,451 billion, makes them a company with a lot more healthy balance sheet than many of their competitors. They have a gross margin of 53.61, which also is much better than their competitors. So something they do that a lot of their competitors don't do is they actually pay a dividend, and they've been consistently increasing that dividend since 2013. So they're becoming much more of an investor-friendly company. Definitely, definitely the best company to invest to in airlines in terms of PE, in terms of a management that's definitely moving the company in the correct direction, giving them a stronger and stronger balance sheet. So definitely, definitely a great buy. Next on the list is Google. Everybody knows what Google is, but in case you don't, there's the Google search, which if you know what that is. Also, a mainstream of their business is actually YouTube. You know what that is because you're watching it right now. YouTube is one of those crazy things. It's pretty much taken over as the main medium as far as video content, not only on the internet, but period. Because I actually read a statistic not too long ago, more hours are watched on YouTube than on regular TV. If you think about it, a lot of shows, you won't watch it live, but you'll catch it on YouTube. You know, say you missed SNL. You can catch most of those sketches on YouTube. You missed The Daily Show last night. Most of the time you can just watch clips of it on YouTube. Speeches on the news, you watch them on YouTube. What's going on with North Korea? Watch it on YouTube. So it's kind of crazy, and it's very believable that it's overtaken TV in terms of total viewed hours. Now they're continually pushing the envelope by, now they have YouTube TV, YouTube Red, something where you can actually start to stream sports and things like that. YouTube has definitely changed the video game and is looking to continually change it. Another third area that they're dabbling in is the smartphone space, with the Pixel. They've also been doing some deals with HTC to help them get into that game. It's kind of almost, I view that almost as like a side business from their two main businesses, which are the YouTube and the Google search. So, why do I like Google so much? The numbers tell a great story for this company. You've got an operating margin of 23.27%, which means this company definitely keeps their expenses under control relative to the amount of income that they bring in. A PE of 34, which is a little bit higher than what I like to see for most companies, unless it's a great company that's just kind of overtaking something as big as what Google and YouTube are. I don't know that anybody else really. To me, it's on the scale. It should at least be equal to Netflix, but the PE of Netflix, I don't even know what the PE of Netflix is right now. Netflix has a 227.92 PE, which is just crazy considering, Netflix is great and they got a lot of great content, but I think YouTube is probably a lot more innovative and probably going to be around a lot longer. I could see so many things overtaking Netflix, and YouTube being one of them. So to me, that's crazy. YouTube is I'd much rather be buying into YouTube than buying into Netflix at these prices. Also, it's been a consistently growing business every year, both in terms of revenue and in terms of earning. It's been consistently raising, as evident by this graph, which shows the increased revenue year by year, with a net profit margin of 19.49, almost 20%, and a gross margin of 60.18. It's definitely more than a lot of other companies in the industry. It means it has more cash to spend on business operations, and it controls its costs and its operating expenses tremendously. So Google's definitely got so much going for it, and it's such a great value, even at a plus 30 PE. Let me know what you think of these picks. A few other honorable mentions I'll throw in there that I kind of wanted to put in, but I just couldn't quite do it. One of them was Home Depot, because they are one of the few retailers I really think, them and like a Lowe's, that's going to be, that I feel like they're at a great valuation now, and they've dipped because so many consumers are scared of them being overtaken by Amazon. Now, they've reported great numbers last quarter. They still dipped, and I don't get it, because you can't get Amazon can't take over a lot of the things that Home Depot does. When I need, to get a new sump pump, I don't want to just order on Amazon. I want to go to Home Depot and have somebody explain to me how do I do this thing. When I want to buy lumber, I don't order He can't order lumber on Amazon. I mean, the shipping costs and all that just make it would never work. So when you go buy your lumber, you're probably also going to buy your screws, maybe a few other tools that you need for the project, all at Home Depot. But the numbers, I didn't like the numbers enough to put it on here, but definitely honorable mention. So those are my picks. If you'd like me to make, I almost was thinking about making a whole video. I could make a whole video about each one of these and kind of get into a little bit more detail, but I didn't want to make this a 5-hour video. So I kind of wanted to briefly go over a lot of these without making the video be too drawn out and too long, still keeping it kind of light, kind of fun. If you enjoyed the video, go ahead and give it a like. Feel free to subscribe. I'm going to try to keep some videos coming out consistently, a few videos every week. Other than that, thanks for watching Financial Success.